Good morning, everybody. Surprise, surprise. Well, accidents were liable to happen. And here we are. So, one thing we've been talking about is interest rates dropping and why is, the market, how is it going to really ignore this? I mentioned in the letter that I don't think that they would, but they were. Just continued to go up. But I'm not so sure that in of itself is what got this market rolling to the downside here this morning. Uh, Seems that this administration continues to move toward a socialist, slowly toward a Marxist type of mindset toward the way this country is built on. And now they're going after railroads and whatever, trying to, I guess, level the playing field everywhere they can from whatever, what's going on in the news and go on, or it's kind of very disturbing. But anyway, the markets are waking up to something doesn't smell right here. And, we talked about materials going down and the transports going down and interest rates going down and, the outlook of economic, boom continuing and that not matching up, but not, I'm not going to say kind of like, why does the market continue to push higher in the face of that? And so this morning we've got this quite large gap down. You can see the spiders here and move down to 428 area. So, gapping down all the way under these bottoming tail bars and to this bar here, that's a significant gap. Now, of course, the question is, do buyers step up and we get a green bar on a gap down? We don't know yet. Bar by bar analysis, regardless of what I'm saying here this morning as to why this might be happening with interest rates and so on and so forth, whether the reality of any of that really comes to fruition at the end of the day, we don't know. And so if this gap down results in a humongous green bar, well, buying the dip obviously won the battle today. Now, this, he had this gap down, excuse me, but it was after a couple of down days. And this is gapping down under these bars that obviously tells us that institutions and traders are buying the dip, looking for this to continue to go higher. And now they're holding losses and not what they expected to happen. So this news about, going after railroads and such, I guess, kind of came out of the blue, blindsided a lot of people. But maybe that's why interest rates have been dropping. We don't know. I guess in time, this will happen. But yeah, those, Debbie saying yield curve flattening. Yeah. And Oliver in YouTube here, we know that's what got things dropping here. So at the time, and I've discussed this in part in these pre-market reviews, is that while interest rates, the 10-year, has been dropping, and we talked about, possibly holding here, and if it broke, it opens up the door to the void down below, and it could go significantly lower. But when it initially started to go down, the 5-year was spiking up. So that was the flattening. So at this point, let's see if I have this chart available to look at. Give me a second here. Look that way. Okay, I'll get it for tomorrow. Anyway, what we saw was that flattening as this pushed up, and the 10-year went down and the 30-year went down. But now the 5-year has dropped significantly yesterday's comment was that if it did that, that in a sense neutralizes that flattening thing a bit because, well, this is going down and, the 10 years going down. Now, of course, it can still be flattening if this is falling faster than the 5-year. So anyway, a flattening yield curve or short-term interest rates going up isn't always the culprit of starting a bear market. That doesn't mean we can't have a significant correction for whatever reason it happens historically. And we do see that, the 3-month, we talked about this months ago, I said to watch this if it starts perking higher. And obviously it has. So, but when the yield curve is flattening and you see the transports also starting to roll over, well, it's warning signs, but it's not reached a point of, type of corrections that we've seen in 2000, I believe 2008, and what appeared to come, out of the blue with the coronavirus drop. The yield curve was almost inverted, so it had been flattening severely for a long time. All right, so those severe situations are not in place right now. Anyway, but today we got a nasty day to deal with, and if you look at, which looked fantastic yesterday, right, the railroads, and look what's happening on those comments today. And it was, wide range bar. It was at a pivot. So I mentioned this in the green room. We weren't going to take position in a push up into resistance from here. But now, this is gapping under that bar. So I think that's what's maybe rattling the markets more than the flattening of the yield curve and the interest rates dropping. But the combination of the two is not a good thing. All right. So let's see where other markets are at here. The S&P is a big, nasty down bar. And so we looked at the spiders as it relates to this move down and a gap. So as we look at the futures and we see what's happening 24 hours and we see one big bar, but when the S&Ps open up, SPX, there's going to be a sizable gap down. And so we've got this climactic type of a bar on the hourly time frame. Next step is to look to the left. And there is some support here, but there's a much more significant support down below in this area. So as this is beginning to bottom here on the 5-minute, maybe it can start to rally. Not so sure. Right? So we've got the beginnings of a bottoming price action, but it really hasn't triggered. You could have a position on here already, but I'd be a little concerned that it hasn't taken out this high, but it just could be part of, making a higher low. Anyway, we'll see. A spike down into this area down here, a much more significant support area, maybe a better place. And in any event, it's starting to happen. The story, McGraw, let me see if I can find it. Biden to target railroads, ocean shipping, and executive order. President action is part of a broad effort to blunt power of big business. Doesn't that sound ominous? So could I repeat it? Biden to target railroads, ocean shipping, in executive order. President action is part of a broad effort to blunt power of big business. And the story goes on. Regulations confronting consolidation. You know what that means, that word consolidation, right? Perceived anti-competitive pricing in the ocean shipping and railroad industries. Yes. No, not a good thing. And, they've talked about Amazon to some extent. I mean, that's their cash cows, and Facebook and Google and so on. So who knows what's next with these people. All right, back to the markets. YM, nasty down bar. I mean, this reached its destination. Yesterday it looked like, I said, at the end of the day, if this thing could close near the high, it's got to be a buy above the high. But that ain't happening. All right. So here's the drop, it's into some support, getting some stabilization. NASDAQ, beautiful uptrend. And, red bars don't break a trend. And the pivot is way down here. But of course, this is a pivot in a smaller time frame. So on a short-term basis, a break below this low here on the futures, and just looking at the cues, which I should be doing here. Did I erase them? Okay. By mistake. Looks like maybe I did. Okay. So down here at 355. Woohoo. What a big gap. All right. Down here at 355, there's a gap fill area. Obviously, I haven't adjusted this in a few days to push this up and this up. But so you've got this bottoming tail down here, right? Pivot 355 right into this open gap. So, but this is a weekly bar is not done, but obviously if it becomes a topping tail, the whole thing is what happens by the end of the day tomorrow, right? Does this gap turn into a buy the dip and, wide range bar up, or does it stay down here at the lows and that would be bearish? And if it cannot rally significantly, or even significantly, all the way back up here, but a minor rally and staying down here is likely to result in more selling at the end of the day. So at the moment, the gap down, somewhere in this area, it just makes sense that it should get bought. And if it doesn't, obviously we know that that's a bad sign. The Russell, 218 to 19, gapping below this pivot low. Now, this is what we call a novice gap. Right? It topped out here. It made a lower high, down day, wide range bar, down day, and a gap below a prior pivot low, greater than 100% retracement. Really not much support here. And it is not showing any powerful signs of life of turning around. We'll look at the futures here, but it's just kind of like grinding lower, and that is bearish. And the idea of staying at the top of the range, which I spoke about at the beginning of the week, well, that's going out the window. And a close below, this green bar and that red bar, well, you don't need me to tell you what's going to happen there. Well, what the word novice suggests, McGraw, is that, a gap down. It's like what someone would call that an exhaustion gap, meaning it was up at resistance and distribution starts to happen. We really don't know that it's going to do this, but as it comes down and then you get a significant gap down into a support area, we call it novice because, look, it's not to say that we wouldn't want to sell if we were long, but we wouldn't be long. If we bought up here, our stop would have been under this low, so we would be out. But gapping down here suggests exhaustion. Now, once you have everything we do in MTS, Master Trader Technical Strategies, is what we call a thought process. So that's one concept, one thought. Now, what do we do with that thought? Well, that leads us to a bias that buyers should want to step up because this has gotten extended on a short-term basis. Now, again, it's gapping down. This was stair-stepping down, and it's gapping down here. Now, it would be much better if the hourly chart looked like this, where it was just flowing to the downside, similar to what the S&Ps look like here, right? just dropping down, opens with a prior bar close, so on and so forth, and just continues to move down. So here are the futures, and you can see how they've moved down, and it's rather controlled versus, just imagine or the pattern that you sold the low at as it was going down, and you were totally convinced. It starts to waterfall to the downside. So as this is going down, if this was the day, the ETF, and we saw this kind of a bar and it was gapping down, I mean, so as we can talk about what degrees of a novice gap, well, this is a 24-hour chart, whereas this is gapping. But if we had a day chart, right, that looked like this, multiple down days, and closed below that low, and it gapped down into this area, I would say that was a major novice gap. Right? These are the kind of moves when they occur, and we get this on a closing basis, that at the end of the day, it's like, please gap down and present me that no-brainer opportunity. It doesn't happen that often. A lot of times days like this actually gap up. But this is a rather controlled move to the downside. So it's not climactic intraday. It's not bottoming intraday. So while that gap down, I use the word novice or climactic, the next step is, if I'm going to now think that this could turn around because of that gap after multiple down days, and I move to a lower time frame to look for bottoming action, I don't have it. So this concept and the other concept are not in alignment yet. So I don't do anything. All right. Didn't mean to turn that into a lesson, but questions were asked. Oil correcting, and this has been in a beautiful bull market advance. And we've got a break of the prior pivot low here, which is major support because it preceded a prior high. This is no longer in an uptrend. Certainly is on the weekly time frame, but it's broken major support, and it's likely to come down here. Gold. You're welcome, Joe. This was the breakdown bar failure. I pointed to the possibility of this reversal last week. That actually has played out, and it's coming up into these converging moving averages. We'll see what it does. Remember, we've been talking even from last week, bar by bar analysis. What's your first reference point of support? Prior bar's low. Hasn't violated that yet. Starting to get an expansion in range here.
Hey, Greg. Greg, I know we aren't here doing an MT Live, but I am putting together some slides on breakdown failures. Where would you enter GLD? I mean, that's not a no-brainer one because of all the resistance to the left.
Well, that is the amazing part of the pattern, Dan, and it's right in the course.
But we also teach, hey, this is a warning to get out of a position, but I'm more particular on a new position.
So in the course, right, and I've been teaching this pattern for, I don't know, 15 years or whatever, because it fights logic. It doesn't suggest this possibility. But when you see something that seems illogical that happens over and over again, it says you have to rethink your beliefs. So this climactic pattern is power. This inability to go up is weakness. And then it breaks down. It's exactly like this. It's right in the manual. It breaks down like this, I point out, it's a minor bottoming tail. It's not what we call a regular bottoming tail. And then it's an inside bar, and the trigger is above here, even though this is here because it's a shock pattern. It's a major shock pattern. And the shorts start covering, and whoever is bullish, obviously they buy because they have long-term beliefs based on whatever that is. And it will go through that resistance. So anybody that's got the MTS manual, go and look in it. It's right in there. All right, let me give it over to you, Dan. Bitcoin, all right. Not so sure yet. It's still within the range. You know, we just talked about this yesterday. Will we get a wide range bar down or a green bar up? And that's about it. All yours, Dan.
All right, thanks. Good morning. Yeah, many reasons, I guess, for the market down. China's doing this thing again. Greg mentioned railroads. Greg mentioned the yields. Technicals that Valerian was on. And I don't know how you can have an opinion like this, but Ariam was saying, oh, I think it's just technical, not fundamental. Well, I guess that's why they had people on CNBC for an opinion. Let's see, do I have the right share here? All right. Yeah, so and we actually have very light inventory, and we're pretty balanced in the advisory letter. We have a couple longs, but we had like 4 open shorts, so we're fairly balanced, and the things that we've been buying have been, very, very amazing high probability setups like PRU we're in, core, so on and so forth. So I can't, some of them, there's no pre-markets. I tightened the stop also on a number of the shorts. We ordered CRIP yesterday, well, they're all there. Just ask me if you have anything specific. We did a put spread on NEGG yesterday. We covered half at 2/3 of max profit, like within an hour. It's crazy, crazy move there. Gapping down here, but I already moved the stop to break even, and this is gapping down, pretty much right where we entered it. So it should still be at a nice open gain. Coin we entered, that's gapping down with Bitcoin down. We did a long stock and put spread. But yeah, Bitcoin's getting whacked. YouTube, Avgo, 464. Well, it's just gapping to the bottom of it's in a trading range. So I don't know what to do with that. MU, we were saying in the trading room yesterday, was getting whacked. MU, look at that. That's what we call an end of day base. It's a very bearish close. Let's see what, anything green today. So I'm glancing at the Dow 30. I got one green stock, Amgen. That's it. Actually moving nicely here. And oh yeah, another reason there's more concern for the Delta 3 variant of Corona, they said. Oh, and actually I missed this news thing too, but I heard Kramer saying at 3:30 in the morning, Beijing said no attendees for the Olympics. And he said that's when things started selling off. You mentioned Japan selling off. So anyway, we've been warning for the musical chairs. All right, so gain, let's see what's going on with you. 1250, bullish gap, but I don't know, maybe 30-minute high. Yeah, I just heard Kramer saying that he said 3:30. This rallied too much, but it's actually, it's what we call a sloppy buy setup. Rallied up hard, came in, reversed, but the gap's too big for me now. Yeah, so with the Corona, all these, reopening things we've been mentioning for a while now, cruise ships and jets are weak. Now they're, more weakness. Wow, I remember saying, Greg, look at this. I remember saying right on this day, 625, I had a target of the 200 on jets, and it's gapping there right now. Nice. Beyond, that was a breakout failure. I heard the news that they're now having a Beyond chicken they're announcing, but there's no pattern there. AMC, we've been saying AMC and GME were both right. This was a topping pattern. And then GME, we just said You know what? This could be a course short right here. And so Debbie, I'm off to a good start, right? Didn't I say that at 200 bucks? So I'm already up 10%, 3 days. Seed. Seed. This was a nasty downtrend. Now we got a shock. We got a shock gap right here. But there's no, there's no price void. Let's come back to it in 30 minutes. Q fin. And this is a huge gap. I think this is a Chinese thing getting whacked. Now, it's not a textbook M top, but it sure has the flavor of it. Let's see if this thing can sell off. And maybe you'll reverse it to 200. Set an alarm down there. Set an alarm at like 2250 or something. This UONE also, let's see if it can take out a 30-minute high. That's a shock right there, gapping over yesterday's high, but there's no price void. Diddy is the recent IPO getting whacked.
And those Amazon call spreads are probably a no-brainer today, if there's any premium left.
Oh yeah, well, we did look yesterday, and the problem was getting a decent midpoint. That was the problem. But let me look again.
I mean, there's so many for expiring tomorrow patterns. Square that have been going up. Twilio. Roku probably wouldn't have it, the premium, but Zoom, Docu, Pendleton, Starbucks, DoorDash. I mean, they're all over the place. Nasty gap downs from extended moves.
All right. You know what? Our NEGG is only 40 cents right now. And yeah, I'll go through those. Wow, look at Healy. That's a nasty gap. Ouch. Our SDX, I tightened the stop already. This had earnings. That's a gap breakout right there. Watch that on a pullback.